Hi, this is Myron, and this is my mortgage playbook. Thinking about purchasing a home this year, you want to figure out where's a good starting point for yourself. I always like to say credit is always the best place to start because it's going to determine a few things in the home buying process. It's going to determine your interest rate, types of loan programs you can get into, and overall just some costs that you might have associated with the home buying process. So, starting with credit, where do I figure out where my credit score might range from? So typically there are two different methods of checking your credit score. One is going to be a credit monitoring app, like on your phone or online, and the other is going to be talking to a loan officer. So starting with the credit monitoring apps, as far as on your phone through Credit Karma, this can be through some banking institutions or credit card companies. They offer all some type of credit monitoring app for you to free check on your credit score. One of the pros when it comes to using these apps is going to be the convenience factor. They're mostly on your phone, which you have with you on a daily basis. They're going to be online, no setup, if very little, where they always pull over a lot of your information. So you just have to click the button and pretty much you're getting a score within under 5 minutes. Now, some of the cons that come with using some of these applications is going to be the scoring model. Typically, as a loan officer, I see these scores going to be anywhere from 20 to 30 points off. Sometimes a little bit more, but sometimes they're going to be about 20 to 30 points off. It's going to be a big con there, obviously, if you're starting the home buying process. Another con of this is going to be the accuracy of the accounts. Often I see that some older accounts that you may have had a few years ago, they're not reporting on that application, or some things are just not reflecting the exact way over once you start the home buying process. Another method that you can use is going to be talking to a loan officer. You're going to have the most accurate credit report because that's going to be the same report that's going to be used at your ultimate goal of purchasing a home. You're going to see everything on there. No accounts typically get missed. The good thing in today's day and age is most loan officers can do what's called a soft credit report. So you don't even take that hard inquiry, which strayed many people in the past. Pro is going to be fit for your goal. As far as I'm trying to purchase a home, I need to talk to the professional or help me accomplish my goal of purchasing a home. They're going to tell you exactly what can or cannot be a problem that's on your credit report when it comes to your goal. Now, odds of talking to a loan officer about your credit is going to be that it takes time. Taking an application is going to take about 15 to 20 minutes for you to complete. And then the next big con is going to be that mental barrier. Most people I discuss with, they're always hesitant to take that first step when it comes to purchasing your home or even talking about your credit. Lastly, what's the right method for me? I would say it's going to be timing of your situation. Whenever, let's say you're at that 0 to 3 month mark of where you either have to move because your lease is coming to an end or that's your goal. I would say 0 to 3 months, you probably want to start talking to a loan officer to get your ducks in order to make sure that, hey, you're in the best financial situation. When the most effective way of talking to a loan officer about what problems may arise based off my credit report for you to start addressing, I think is a big method here when you're talking about that 0 to 3 mark, because again, you want to start getting everything in order to make the most efficient and the most beneficial to yourself mortgage process. I would say if your credit score is at where you think it needs to be and you don't have those issues, I think it's still a great opportunity for you to start talking to a loan officer, because let's say your credit score is good, you may be able to figure out how you can make it great. And again, with that soft pull available now, it doesn't cost you anything but a little bit of time. 3 to 6 months, you're at that time period of where it's based off of confidence that you have in your score. At 3 to 6 months and on, I think you really get into that place of, hey, if I have any doubt at all about the credit score that I have, I probably should go ahead and talk to a loan officer, because it can verify or validate some of the issues you may have. If you feel really confident in your credit score and you know that, hey, the loan program out there for me, I'm going to get it, there's no problem at all, then you can start to lean towards the apps a little bit more. And then that's the same thing for 6 months and on. The more confidence you have in your credit score, I think the better shot of you just using the applications. Now, if you don't, then still, even getting a long-term plan of, hey, I have consultations all the time where I have clients that are 12 months out where I'm like, hey, you probably should address these factors, or hey, you don't need to address these factors. We're not credit specialists by any means, but I can still point out certain issues that could arise if you did try to purchase the home today. So I think your scenario is going to be the biggest determining factor of when you should, or how you should start monitoring your credit. This is Myron. This is my mortgage playbook. Stay tuned for the next episode. If you guys have any comments or questions or anything you want me to cover in the next video, please feel free to drop a comment below. Until next time, thank you.